Good afternoon, everyone, and happy Monday. I want to disclose something that I've started doing as of today, and that is I have resumed selling cash secured puts on VALE because, frankly, I think that at the present moment, for me, it's a no brainer. VALE, in case you're not aware, is a Brazilian mining company. They are the largest producer of iron ore and nickel on the planet Earth. Don't know about any alien companies that might be beating them out there in the galaxy, but certainly the largest in our world. And they are, since they are commodity based, not only is their stock price cyclical, but their business is also cyclical, okay? What you see here is up, down, down, up, 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 kind of staying flat, up, up, down, right? So there's going to be peaks and valleys in terms of their revenue and their earnings. Okay. You see it down here too. The earnings are there, negative, up, 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 negative, up, way up, way up. The free cash flow is a little bit more consistent. And the dividend also is pretty scattershot, right? It's beefy, it's low, average, beefier, average, super beefy, pretty beefy, right? So the reason this changes so much is because iron ore prices fluctuate based on how much construction, industrialization, and overall production of industrial goods like things you would produce in a factory, cars, heavy machinery, and that kind of thing. How much of that kind of thing, how much steel is being produced in the steel by the steel makers of the world? That's really the big driver of the price of iron ore. So in times of economic boom, when everybody's doing, infrastructure, construction, the automakers are mass producing cars, etc., that can be very good for a company that produces those industrial raw materials. But in times of anticipated economic woe, where maybe construction is slower, people aren't buying as many new cars, nobody's really building any new factories, etc., that's going to be the time where you see the contractions in a company like this that produces those raw materials. And it's really based on the supply and demand of the iron ore itself. Because when production's in full swing, demand is high, the price goes up. And in response, they increase production to increase the supply. Their gross margins get pretty frothy, okay? But when things contract, suddenly the gross margins deplete as they have to lower their prices to sell, and they feel the squeeze. They have to cut production, and it can be tough for a good year or two for them. Now, why is it that I feel good about buying a stock when it's so scattershot and all over the place? Well, if we look at what the forecast is for the near future, we see that this year they're anticipating about $3 per share in EPS, which is a 25% decline from last year, which I think is probably going to be pretty close to the mark. And then mid to upper single digit decline in 2024 and 2025. Now, the further out you get, I think the less you can rely on these assumptions from analysts. But, let's say that the overall trend is correct and that it is, it's going to be a couple tough years here in terms of EPS. And hey, maybe that goes on further into the future. Okay, I have taken that into account in my pricing model. So we pull up an EPS-based valuation for VALE based on the analyst estimate starting point of $3.03. We apply a 12.5% discount rate because I want to beat the market. We give them credit for the tangible book value because despite all the cyclical nature of their business, they have built up a pretty good balance sheet. And what we have assumed is that they will experience 10% annual average decline over the next 10 years. And that does not bring them to zero, by the way. That's not how numbers work. It will be always be 10% of that year's income, their EPS, that it declines. So it would go, 90% of today's, 81% of today's, so on and so forth. But it would never reach zero because it's always based on that year as the starting point to apply the 10%. So it never quite hits zero that way. And then 5% decline over the next 10 years after that. And even still, again, with this higher than average discount rate, and assuming that it just stays bad for over a decade, okay, that iron ore just gets beaten to crap, we still come out with a valuation of $18.72. What this number means is either if you think this is the real fair value, you're getting a 30% discount today, or it means that if you want to really make a 12.5% return and believe these numbers to be true, which I actually don't even really believe these numbers. I think these numbers are much worse than what the reality actually will be. You come out with a fair value of $18.72. It's just, that is mind-boggling. You could pay $18.72 and get a 12.5% return, even with these awful assumptions about what their future earnings might look like. Now, I can't know the future, but my assumption would be that in over a very, very long period of time, like decades, I think overall the world will industrialize more, develop more, build more infrastructure, more roads, more skyscrapers, more factories, more people. There will be bigger middle classes that have more demand for automobiles, like in China, for example. And I think that VALE will benefit from that in the long run, because I think that there will be a certain floor and for iron ore, which they produce, that will steadily go up as the world economy continues to develop. Okay, now that's just my general investment thesis on this, and it's sort of just it's basically a bet on the further development and industrialization of the entire world. Okay, and the need for the material, the raw industrial materials that they provide, to go into that. Will I be correct or not? Well, hey, time will tell, but I feel that even with very, very conservative assumptions, that we're at a pretty good price for this today. And so that's why I'm personally selling puts. And that just means, I'm setting a $12.50 strike and collecting premium. And if the stock goes below that price, I'll pick up some more shares. If not, then I'll just collect the premium and sit and just hold on to the shares I've already got. It's that simple, ladies and gentlemen. And that's how I plan to keep on working with VALE in the long run. And hey, that's how I kind of benefit from the cyclical nature of the stock. Let me know what you think in the comments below. What do you think the future is for iron ore? Do you own any shares of VALE? Do you think I'm correct in my predictions and my thesis? Do you think I'm missing something? Always feel free to share. Until next time, everybody, take it easy. Have a wonderful day.